Hey guys, welcome to ES Review. I'm going to go over what's been going on for the past few months really quickly and then go into what we saw today. I'm on an 8 hour chart, a higher time frame here, so that we can really get a broad view of what's been happening in the market pretty much since May. First of all, white lines are major levels, orange lines are minor levels, red lines, if you see them, are typically important lows that we're looking at. I can pretty much, these are for actually some lows over here. We're not really interested in that right now. Since May, we've pretty much broken out around the beginning of May and then just consolidated in this about 400-ish point range, which is great. When you have consolidation, that's when you get the easier setups. They're constant. We're buying, we're going up, we're coming down, getting another long. We want to go for longs. The market has been paying longs for many years now. For every one good short, you're going to get sometimes three, four, five, up to seven, eight or more longs, sometimes from the same level. So why not go with what's easier and more consistent as opposed to what's more violent and more rapid and exciting sometimes. But hey, we're looking for profits. So going back to what we see for the past few months, it's been consolidating. Ever since about end of June, we exploded up and have we been consolidating once again sideways. You have two patterns here I've been looking at. I've been monitoring this broadening formation probably since around the beginning of July, and you can see we filled it out pretty well. We hit it twice up here and three times over here. Four times over here, including the origination. And then more recently, I've been thinking if this potentially is also a bull flag. Now, these patterns really are more about just giving us an idea of where we can expect price action to go. We're not looking for the answers from this, but a lot of times you will get the question you have answered from charts, from these formations. For example, when we came down here, we had a great fail breakdown, what we're going to get into our favorite setup in a few minutes, and then just more dips below. You can see now that we hit it here today and we held, that's pretty good. But if we come back and we can't hold this low, maybe trap one more time here, then we could be looking at a nice little sell-off, testing some of these other lows, and that's when we'll be more interested in what's to come. I can put a red line here for this low potentially if we get down there. So now let's look into more of closer chart on a lower time frame. Here's a 1 hour chart, kind of shows you what's going on. We gapped up, so we opened Sunday with a gap up where price opened higher than it closed and a lot more significantly. There's the sign of some bullishness here. You can see this level held three times, so I was expecting us to come back, maybe test this first and then come up to here. That's exactly what we did overnight before selling this morning violently, and that's what we're looking for. And then we sold down. So now let's go to a 15-minute chart and see what was going on a little more clear. So when we sold down, I was looking for a low. Initially, the first low I had in mind were these two right here. So maybe like a little dip below, tagging the orange minor level or even the major level and come back above. We did not get that. Instead, we continued to sell down. And the first thing we did was we undercut this cluster of lows. 1, 2, 3, 4 lows, including I just called these two the more prominent lows. You can see we went from around 74.32 up to 74.96. It's almost 60 plus points, so there's a definite significant lows. So what I would go ahead and do is I had a red line here. I took it out just so I could show you the process in real time. And then I'm looking for a buffer above. Once we undercut this low and go back above, if we don't undercut it by a certain amount, I'm looking for us to get above it by a certain amount in order for me to go long. So we have that low set up right there. And now I have my green trigger. Now, if we lose this cluster of lows by more than 10 points, then I am open to going long above the exact low when we get back up there. If we don't, then I'm more susceptible to using the green trigger for my entry. So now let's really quick see how this played out and kind of break it down for you. Give me 1 second. Okay, so let's see how this played out. When did we lose the low? We lost the low initially here at 10:37. We bounced above to the trigger and only held for a minute or two before coming back down. No real sign of acceptance. We did not hit the trigger and sell. We went above it, if anything, and then we came back down. We came back to the low, and here we got a decent amount of acceptance. You can see at least we hit the price from the low. This is the low from back there. We sold down, we came back to it, sold a little bit before pushing through. That could be considered a decent level of acceptance if one wanted to go long. We also got acceptance at the trigger. You can see we pretty much went to the trigger, missed it by not even a point, sold, and then came back and pushed through. And then we held for a few minutes. One could go long, somewhere in this range, and then this clearly worked out where it hit this level up before selling. So this was a great fail breakdown, really quick. You're looking at an entry somewhere around 10:45-ish and being done with the trade in 15 minutes for a solid almost 20-point gain. We love to see it. However, today we got actually 3 failed breakdowns back to back consecutively. So now you can see after we hit that trade, it sold down and lost the low that was set this morning. So that low was 74.23, about 5 points above that. It's about 74.28. Now let's break down how this went down. So we lost that low right here around 11:30, and we hit the trigger, sold a little bit and pushed through, and then kind of just held above the trigger for a little bit. One can kind of go long if you want at that point. We have some other lows below it, so it was a little risky. So up to you. If you had not gotten this trade and you were still looking for a trade, definitely not the worst trade to enter, because you can see around 74.30-ish. Stop loss would have been about less than 10 points depending on where you entered, so it's a pretty good risk reward. You're looking for potentially the first level up at least, so if you're catching it around 74.28, that's a solid 6 points right there, which we got, and then more. So that was the second trade of the day if you missed it. Another failed breakdown, and then afterwards we got one more trade yet again. The low here was 1875. So I'm looking around 2375 to enter. Low is 850. So that's what I thought. Now we came down and we undercut this low. There was another low right here, also very prominent because that pretty much covered all the action before coming back down. Usually in Dow Jones you'll see this more often, but once in a while ES will present it where it only will cover one of those lows, not the other one. You have to trust the process, and then let's see how this played out yet again. So we lost the low around, we hit the low around 105, we lost it around 118. All the while we were hitting and rejecting at the green trigger, but that's acceptance. You can see we came up to it, hit it, sold down, again came through, pushed through, tried holding above it for a few minutes, sold down, came back up, same thing again and again, until finally we pushed through and started holding for a while. This one took a while. I probably would have not have entered until around 135 or after, just seeing it push through again and holding for a couple minutes. And then that ended up working out to be the trade of the day, actually, in terms of risk reward, as it rocketed up over 25 points. So we got 3 failed breakdowns back to back in ES today, all pretty much very straightforward. Hope that helps. I'll be back with more. Have a great day.